What's up, guys? How we doing? Let's get to it, man. ATR here on the 5 minute is 32. Man, we can work with 32. We can get a bit of work done here at 32. What do you say? Let's do it. Let's do it. All right. Take a quick peek over here on the 2 minute. Market's basically in a big giant range right above 25K. I'm on the June contract, by the way. Go back to the 5 here. Bar 23, 315 out. How we doing, guys? DB, Gamma, Trevor. What's up? How we doing? I mean, things are tightening up here on NQ, which leads me to think that we're gonna break here at some point. I mean, you can only tighten up a wedge so far. You can only ratchet down the straps so hard until everything snaps, right? So let's hope we snap downside. Let's get down through 25,000. I would love that. Some volatility going. But until then, I gotta be thinking range. Yeah, so tomorrow is all loaded up. We've got PPI an hour before open tomorrow, and then we have FOMC at 1 o'clock Central. Tomorrow, not today, tomorrow. Now, if it were 2022, I'd say, okay, today might be, if the market's not priced how the market wants to be priced, how participants want it to be priced, it might be kind of whippy. But it's probably already baked in. We'll probably see a slow day today. Tomorrow's might be kind of crazy, and then slow around the releases, right? That it's not 2022, man. Inflation, I mean, as far as the market's concerned, who gives a shit, right? So I don't really think the market has too many excuses here today. 23 closing up here, 30 seconds out. You got a range, man. Got to keep that top of mind. Yeah, look, FOMC. By the way, it was a little more difficult to predict what FOMC was going to do 3 years ago. At this point, Don't let anybody tell you and flex on you how their track record for predicting FOMC has been so good. Predicting FOMC is the easiest thing imaginable. All you got to, especially right now, go to cmegroup.com, actually type in CME Group Fed Watch on Google, and it'll give you the probability of the target rates being baked in by the markets. Okay, so with a 99+% certainty, nobody should be flexing their FOMC prediction rate. But what does that mean for us? Well, it means that tomorrow people are going to flip out and say, oh my God, it's FOMC day. It means almost nothing at this point. We just got to work around the news. Same thing with PPI. Okay, just work around the news. Ideally, don't be holding anything through the news. Especially if you're with TakeProfitTrader. They don't like that. Oh, 25,000. You've been giving me night terrors lately, man. I'm waking up at 3 a.m. drenched, saying, oh my God, it's June, and I haven't had a trade since April. And then I remember it's March and it's all good. But this is a nightmare, dude. 25,000. You're killing me! Get me away! All right, bar 24, 35 seconds out. Get us down through this range, through 25,000. Jesus, I can't do 25K anymore. I'm gonna start losing it, I think. All right, 25. What you got for us? You're almost tempted to get long and just risk the wick low at 10, huh? Yeah, if it breaks 25,000, it'll take out probably at least 5 points just with stops. And then it'll clip you. 2-minute chart. Wait, what was the ATR? I missed it. I didn't look. All right, 23 ATR on the 2-minute. 34 out here on the 5. That's not, you know, it's not great, but we can work with 34. It's all right. All right, minute 50 out here, 25 trying to get down through 25,000. That would be appropriate for bar 25 to do it. All right, what's up? Minute 7 out. God, being rated 25K, this is a pain. Okay, good. Now, being that this is so range bound, I'm gonna wait on 26. I don't trust it yet. First candle closing beneath 25K, by the way, in this little sequence. Well, wait a second. Actually, all day, huh? Yeah, that's the first candle closed beneath 25K all day. Even more reason to wait on 26. If 26 can give me a nice clean bear close, I'm gonna slap it with a stop limit sell. 4 minutes out. Nico, any professional advice on how to bounce back from 4 potential payouts and lost them? I don't mean to laugh at you, brother. It's just professional advice. How about some shit talk about it, huh? If you had 4 payouts and lost them, let me put it this way. If you've never been close to payouts and then you happen to go on a losing streak and you lose the payouts, you haven't been trading long enough at a big enough sample size. Now, if you gambled like a fucking degenerate and lost them, you should feel pretty bad about that. But don't be like, okay, wow, time to quit because I suck. No, say, did that hurt when I did that? Okay, I'm gonna stop doing that. It feels a lot better to just be disciplined. And the problem, you know what the problem in trading is? It's that if you've never been through the pain, it's hard to teach it to you. You know what I mean? Everything that I am telling you right now, it kind of requires, for a lot of people, not everybody, but for a lot of people like me, it requires you to say, yeah, that's great, I'm not going to do that. And then you do it and you go through the pain and you're like, oh, fuck, that's what he was talking about. Now it's easy to be disciplined because that hurt way more than I thought it would. And I don't want to feel that again. So in a way, you're kind of running away from the pain of not being disciplined, which just lets you be disciplined all the time. But you know what? Think of it like we talk about stop losses and take profits. How you're gonna get within 1 tick of your take profit, it'll turn around and stop you out. Does that mean you suck? No. People think that though. And if you get within 1 tick of your stop loss, turns around, hits take profit, does that mean you're God? Of course not. People might think you must be really good though. Wow. No, it's a coincidence. The stop is in a strategic spot. It just so happened to happen that time. It's gonna happen both ways. Now, when we're talking prop firms, this doesn't so much apply to personal accounts, but if we're talking prop firms, you're gonna have accounts that go deep into drawdown and then turn into massive workhorses that you take a bunch of payouts on. You're also gonna have some accounts that get really close to payout and then slowly trickle back over time to the point where it's like, shit, this account is worthless because I went on a losing streak. Now, the point of having edge is that the good will happen to you a bit more often than the bad, but it all just is. Good or bad, whatever. Do you have positive expected value? Yes, scale. It's easy to overcomplicate the emotions of this because we're human, and we're kind of emotionally inferior in a lot of ways, but that's also what makes us human, which is a fucking good thing. Big wick back out of 26. All right, let's watch 27 here. In the meantime, pop over to the 2, see what's going on. Same kind of deal over here on the 2. All right, so we took out the wick low of the bar number 1, which was the low a day, here on bar 26, now on 27. Now that we've taken that out, if I could see 27 here close beneath the wick low of 26 and do so clean, then I've got to get short. So this is one of the nuanced things within RAM, and that is when the market is lower volatility and a bit more range bound, you'll notice that I'm less excitable to put on continuation, and I put on more limit order reversion scalps. And as we know, well, as maybe you don't know, I know that I have more edge on continuation in high volatility, but we don't always have high volatility, do we? So what, you're just gonna make money when the market's perfect? That's fucking stupid. I know I have edge on limit order reversion. It's not as much. Okay, which is why, you know, my trade count in a market like this, it depends on the market. It might creep up, but, you know, I would much rather have a higher volatility environment. And that goes for every kind of trading, by the way. If you're a net sell option spreads, when volatility sucks, you make less money on average. When volatility is really high, you can kill it. If you're trading small cap momentum, cold markets, all of a sudden you go from making, you know, 30,000 a day to like 5,000 if you're lucky, because nothing's moving. Trading is volatile like this. I think a lot of people, I didn't really understand that coming in, but you can even out the curve by trading something like Nasdaq, which, you know, for the most part is typically moving at least a bit. It's you know, it can die compared to the good markets, but maybe I shouldn't say this out loud because all of a sudden the ATR will be 3. All that to say, when the market's good, you gotta try to do as best as you can, which is why I always say discipline goes both ways. It doesn't just mean, you know, staying out of bad stuff and not moving stop losses. It means not taking profits early. People will argue that point till they're blue in the face and then go on to lose money for 3 more years. I don't fucking get it. It means when there's 3 setups back to back, you put them on. Even if you're scared. You know, because when the sun's shining, man, we gotta make some hay. Stuck right at 25,000. Man, what a nightmare of a level. So my question now becomes, do we form just a big, giant, full day trading range and continue higher, or does this become a thing? And we take out 25, or I guess we leave 25K behind and head lower through the low a day and give up the low of this potential big full day trading range. I would much prefer that. The probability on that is definitely not the highest. This market's still infatuated with 25K. Starting to go sideways a little bit here on the 5. And we gotta take out this low and head lower. You know what I'm going to do? I see that wick high at 25. You got the 20 EMA below there. That's bottom of the barrel, but it's still within reason. Got a potential sideways range here, and also a potential big soft bear channel. Yeah, let me give that one stab. Just for a scalp. And see if the bears can fade that guy back in to that soft bear channel. If they want to make that a sideways trading range, fine by me. Still supports my thesis. All right, ATR 35. Little deeper, bears. Come on now. Bunch of baby bears, man. Come on now. ATR 35. Dancing around 25,000, starting to lose a bit of relevance as far as a precise level, right? As you dance around it more and more, it just becomes kind of a big range. The market likes to stick to it, but the level itself typically starts to lose relevance as a precise area, right? There's the rollover into bar 30. There you go. No fill, gotta pull it. One more run, Bears. Come on now. Come on, Bears, fade it. Give me a fill this time. ATR 34. Market is dancing. Dancing with 25. There we go. I got much better than a half ATR on that scalp. All right, 22.95. Let's keep it moving here. All right, 420 out here to the close of 31. We'll see here. We'll see if this does end up turning into a big sideways trading range. Two-minute chart here. Keep an eye on this, 90 seconds out. Gotta be aware, again, big risk of a sideways range, but if there's room on a scalp on the 2, I could fit one in. That bar is starting to grow. Too much now. All right, back to the 5. 1:50. All right, there's the open bar 32. Now, my primary concern here is that this just becomes a thing right around 25,000. It's pretty likely. Now, best case scenario, we would just plow lower. Turn this into a big bear trend, obviously best case. The more probable case is that this thing goes sideways for a little while around 25. Let's just hope that that doesn't happen for too long. All right, I'll be right back. 2 minutes. What's up? Welcome back. Does anybody have coffee in their lap? That is traditionally the goal around here. All right, bar 34 here on the 5-minute. Got the wick high at 29. If I can, I'd like to take a limit order reversion scalp. If 34 can get a little bit higher, get me up in the upper third of that soft bear channel. But I gotta be honest, we could also just be forming a big wedge tightening down at this low region here. But even that being the case, that would still be a just fine limit order reversion ram scalp. So let's see if I can get something that makes sense to hit. Come on, you bulls. Get a little cocky. By the way, ATR here on the 5-minute is 32. Definitely not the highest ATR day. We can still do some work at 32. That's no big deal. Alright, let's see if the bulls can get just a tad cockier. Put me up in the mid to high 990s. That would put me in the upper third. And then I can try to fade them. Boom. Build. Alright. Stop is out. Right above the wick high at 29. And again, you have a soft bear channel / bear wedge, which means I can slap on a limit order reversion scalp and make perfect sense of that. Risk is managed above the wick high bar 29, which also has the 20 EMA in there, which is bottom of the barrel. Let's see if the bears can fade that guy. ATR 33, maybe 34. Bull's trying to take it back up through 25. Step on in, bears. Fade that baby. Come on, you bears, fade it. Now, if they end up taking out the wick high at 29, I'll of course cut it, and then we're probably looking at a big sideways trading range right here. Which, I gotta tell you, if we end up seeing that, that's really gonna piss me off right around 25,000. Alright, we'll cut that there. Obviously, there's no trade there on the close of 34. This is gonna be probably a big sideways range, which is just our worst case scenario. That's going to kill volatility. So let's see what we can grab for trade number 3 here, if we can get anything reasonable. Jones, what's up, big dog? This is a 2-minute chart. Oh, 25,000. All right. Let's see what 35's got in store here. Well, yeah, you're ready in case we pop this thing a little bit last second. Got 34 closing outside the trading range. Let's see if 35 can pop a bit and give me a cleaner close. That's ugly. That's ugly. 35. All right, waiting on 36. Way too much of a risk of that heading right back into the range, so I wait on 36. Question, do you feel like you've won the battle? Sorry, do you feel like you've won half the battle after passing an eval, or has the battle just now begun? I'll tell you something. If I pass an eval or 2 or 3 or 5, I feel relief that I get to stop messing around with an eval. Opportunity cost is everything. It's a pain in the ass to have to pass an eval or 3 or 5. But it's really not that big of a deal if it's single day pass like they have at Apex. Just take some time in the afternoon, get through it. Trade responsibly, but I loosen the reins a bit. It's like, okay, that's done. Now back to work. That's how I feel. Bar 36, trying to head back to the trading range. Man, if you haven't yet, hit like on the stream. I appreciate you doing so. Helps out a whole bunch. Well, ATR here on the 5 minute sitting 31. Man, let's hope. Let's hope and pray that doesn't dip below 30. If that starts dipping into the mid 20s, oh geez. Look at the 2-minute chart, you guys. 86 all the way through 92. Big single bar sideways range. ATR on the 2 minutes down below 20 now. We're sitting at 19. Here comes the rollover. Are you kidding me, Bulls? Man! Bar 37 looking half reasonable until the last 7 seconds of the bar. Oh, ridiculous. Man, we are glued to 25, aren't we? All right, Bulls, you want to get cocky, then take it up and away. Do it to him. All right, 3 minutes, 15 seconds out here to the close of bar 38 here on the NQ 5-minute chart. We'll see how it closes up. ATR 31. Two minutes. All right. 22 seconds. See how bar 38 closes up. Range right in line with ATR. That's just fine. And yeah, I can make sense of that only if the bears are able to take out, or I guess close it beneath the wick low of 37. That is barely a tick or two, which means I'm only going to give that order 15 seconds to fill. And if they want it, then I'd like to participate. If not, no fill, no trade. Gotta pull it. All right, let's check out the 2-minute here. Oh, Jesus. We'll head back to the 5. Oh, man. Question, someone says, does anyone know if you can go long on oil and short on, let's say, NQ? Okay, so most of these prop firms have rules against hedging. Now, there are correlated instruments, and then there are instruments that are not correlated. That is up for interpretation, and it also kind of depends on the market environment. Now, NQ and ES are always going to be correlated, right? But you could also have the inverse correlation. So the answer to that question is I wouldn't mess with it, because you're putting the ball in the prop firm's court to decide if there's a relationship between the two, and usually they're probably going to say that you were hedging. I wouldn't mess with it. Just trade an instrument. Holy shit, this market is boring today, man. ATR 32, bar 39 here, big trading range. I was just glued to 25,000. So you want to be a day trader, huh? This is the life. All right, let's watch bar 40 here. I'm on the 5-minute right now. And we're popping back and forth between the 5 and this is the 2-minute. Obviously bar 98 for people who don't dive deeper into the nuance of RAM, they would think that that's a tremendous setup. Yeah, but the context, this is a range. Okay, so you gotta wait for at least bar 99. But back to the 5-minute here, watching bar 40, 335 out. How do you position your stop and reward to risk? It depends entirely on the setup at hand. All right, stick around. I think you'll catch on. It's not all that complicated, but it is nuanced. All right, bar 40 here, rolling over in a minute 36. Oh my goodness. 2 minutes gonna be ugly. You ready? Yep. Big bar 100 over here on the 2-minute. Back to the 5. Alright, ATR on the 5-minute just dipped below 30. Oh, man! That is not tremendous. We don't love it. Yeah, by the way, that poll, I'm not talking like in funded accounts or whatever. I'm talking money that hit your bank account from trading in 1 month. So don't use any other gauge because you're probably just going to make people feel bad about themselves. In the bank from trading in a single month. You know what? If the answer is 0, fuck it. The answer is 0. Make it not 0 in the near future. You know, I always appreciate when people they're not too shameful to say, Nico, the answer is fucking nothing so far for me. Right? Because that's accountability. I like that shit. And you know what? For those people, the answer won't be 0 for too much longer. $68 seconds to the close of 41. Guys, if the answer is 0, it's okay. Don't go and chastise yourself. The answer was 0 for me at 1.2. Everyone starts at that number. And then it's, you get some money in the bank 1 month from trading, and then the answer is 0, never again. All right, 41, rolling over into 42 here. Big old, basically doji, tiny bear body out of 41. Man, if you haven't yet, hit the like button. Or the dislike button, big dog. At this point, I'll take anything. I need some dopamine. Because you know the market's not giving it to me. Fuck. R42. Oh, 25,000. I'd like to have a few words with you, 25. This is going crazy. Well, on the bright side with the tomb this afternoon, 3 o'clock Eastern, I get to hop in and do a RAM lab with them. By the way, if you're in the tomb, 3 o'clock Eastern, 2 p.m. Central, I'll be doing a RAM lab, open Q&A for you guys. Anything you need cleared up on psychology, RAM in general, nuance, context, whatever. We'll be doing that. 3 o'clock Eastern. So whatever you need, get it ready for that, and I'll see you guys in there live. In the meantime, I need bar 42 and clean up, because this is starting to make me mad! ATR 28 on the 5, 16 on the 2. Look at this. Oh my goodness. Just big sideways single bar range. 94 through 98 gave us hope. And nothing since then. And right around 25K just to drive it home. All right, 42 rolling over into 43. Still an inside close inside the wick low of 38. Sideways range here. Right now I'm looking at this one, right? Which, oh, big coincidence. Right around 25K. All right, guys. Well, couple hours, 2 hours, actually exactly from right now, 2 hours, I'll be doing the RAM lab with you guys in the tomb. If you're not in the tomb, join up, man. I'll see you there. Open Q&A on all things RAM, psychology, discipline, whatever you need. All right. If I don't walk away and hit lunch right now, I think I'm going to lose it with 25K. So for 25K and my own protection, I'm going to go hit lunch. All right, guys. I'll see, I don't know. I'll see some of you guys, whoever's in the tomb. I'll see you in a couple hours. The rest of you tomorrow morning. We'll be back. By the way, tomorrow PPI, 1 hour before the market opens, and FOMC in the afternoon, okay? So work around it. It's nothing unexpected. Again, it's not difficult to predict FOMC at this point. It's not really a inflation focused time in the market. Not really, right? It's not 2022. So just work around it. I wouldn't be holding trades through PPI or FOMC, but no reason we can't take plenty of stuff in between. Plenty of time in between to put some stuff on. But right now, I gotta go hit lunch. All right, guys. I will see you either this afternoon or tomorrow morning. Hang in there, man. Stay patient. Volatility's coming back.